Good afternoon and welcome to the Coinbase Institutional Markets Call. My name is Ben Floyd. I'm Head of Execution Services and I will be your host for today. David Duong is out. He's taking a well-earned break, so we'll see him next week. David, I hope you're enjoying your time out. We've got a great call with David Dhan and Joshua Pak. What's funny, we're kind of in the end of the summer now. We've got Labor Day next week, and one would expect there not to be much on the docket. But when we're preparing for the call, there's actually a ton going on. David, we're going to hear from you a lot. Why is it we've got suddenly a ton of kind of new releases and launches at the end of August in the on-chain environment?
I guess maybe a lot of people are getting ready for people to come back into the markets and preparing for that. It's been pretty exciting. We've had a lot of announcements across, different chains, different ecosystems, different sectors. So there's been a lot of things that have been happening this past week in terms of major announcements that might have been, I guess, overlooked in light of some of the macro events that have been occurring recently.
Yeah, I think that's right. It's kind of nice. Obviously, we'll cover Jackson Hole, but it's nice that the macro is a little quieter so that we can dive deeper into these things. We don't always have the time. So yeah, get ready for a very good show full of on-chain nuggets of information from David shortly. Outside of that, we're going to have a market update. We're going to cover the ETFs and other important news for this week. And then we're going to, as I said, just go into various different parts of the on-chain, talking about tokenized securities, talking about a big rebrand from Maker, what that means, talking about some of the protocols that are launching towards the end of the year, and much, much more. But before we get into it, if you are watching on YouTube, don't forget to scan that QR code to access all of the team's fantastic research. If you are listening on a podcast platform, all of that information will be on your show notes. And no matter where you're listening, please don't forget to scan and subscribe, or rather subscribe to the podcast so you can get alerts when a new one drops. But without further ado, let's get right into it. So ETF flows. Now, I want to spend a bit more time on this week because I guess like Bitcoin and Ether are two very different beasts. And I think the story there has also been very different. So maybe let's kind of kick off with Bitcoin, Josh, and like talk us through what's been happening from a flow perspective and kind of how we should be thinking about that. And then maybe we'll move on to ETH and others after that.
Yeah, sounds good. BTC, obviously, it's a dominant king. When you look at the flows, like it's, I think, truly remarkable and probably has surpassed most market participant expectations at this point in time. Just as a product, it's obviously seeing strong product market fit and strong demand. When we look at ETF flows and BTC here, what we see is that I think as of yesterday, there was about $474 million worth of net inflows in the last week alone, 195 million of that on Monday on its own. So I think in general, when you're taking a look at all the macro conditions that are going on with Jackson Hole and everything that happened last week on Friday, I think what we end up seeing is that as a product, BTC is one that has obviously a lot of sensitivity around rate expectations, and that's exactly what we saw on Monday.
Yeah, for sure. I mean, I think Bitcoin is the one that's really kind of taking the air out of the room with regards to every other asset at this point. If you're a macro investor, you understand it. If you're a retail investor, you've probably got the most mind share around that particular asset. You've heard about it the most. You see it the most in the headlines. And as some of these wealth platforms continue to onboard and offer these products, I think we're just going to continue to see that. And people like narratives, people understand easy narratives, and the Bitcoin narrative is just so simple to get that it's hard to make an argument as to why we're going to see that slow down relative to others. And Bitcoin dominance now is at some of the highest points we've seen for quite some time now, but it's hard to argue why we should see it switch for any reason. But let's move on to Ethereum now, and it's kind of a bit of a tale of two halves in some ways. So let's run through Ethereum flows, and then David, we'd love to bring you in here and kind of to talk about some of the narratives around Ethereum and maybe how they differ versus Bitcoin.
Yep. So I'll just walk through the flows quickly. So ETH, obviously, Ben, as you're indicating, much quieter than expected. And I think just in general, that was somewhat the expectation, right? The product itself launched in the middle of summer. I think in general, there are various different flow considerations that in itself. But as expected, it was quieter. We had an net outflow week last week of $44 million. We had a net outflow day of $5.7 million on Monday. So as you're indicating, these are two completely different. These are flow pictures that look very different. Having said, I wouldn't say necessarily unexpected. With that, David, over to you.
Yeah, I think the ETH story has been a bit harder to sell in the Wall Street space, especially with these ETFs. I guess there's two reasons for this one. First and foremost, Bitcoin it's a dead simple narrative. There's 21 million fixed supply cap. There's a halving every 4 years. Blocks are produced, and the miners get revenue, and eventually that revenue is going to taper off to zero. So that's a very, very clear simple supply story, and especially as a hedge against as a supernatural asset, you don't want to muck around with any sort of like weird emission schedules. ETH is much harder of a sell because it's a cryptocurrency like Bitcoin, but then there's a question of like, what are smart contracts? What value do they offer? If you're investing in ETH as a pure smart contract platform, what about its competitors like Solana or some of these other higher performant blockchains? Then there's also the questions around its burn, its supply, its issuance, which really are very dynamic. The more ETH is staked, the more ETH is issued. The less fees there are, the less fee demand there is. The less is burned. And so you constantly have this dynamically adjusting inflation schedule, and no one's going to really know where ETH is going to be in terms of supply in 5, 10, 15 years. But that is known for Bitcoin. And so I think you have these very, very different pictures. And the second one for ETH is much harder to understand. I think that's one big component of why there's been less ETH flows initially, is just the education component. The second thing is if you're thinking about cryptocurrency as kind of like a portfolio diversifier, where you just want some, a little bit of diversification, 1, 2, 3% of your portfolio in crypto, just to kind of, diversify your returns. Bitcoin already covers most of that. Bitcoin, ETH, we have, typically at least an 80% correlation. And so the question would be, what's the upside of having Bitcoin and ETH, or just ETH over Bitcoin? And I think that story or that narrative is a lot less clear for some of these players who only view Bitcoin as a, pure crypto diversification play. So I think there's some challenges and some uphill battles here. I think that will take time to resolve as the market gets more educated about the differences between Bitcoin, ETH. Potentially in the long term, I think that ETH might pick up, but for now, I think it's a much more difficult story to sell for people who aren't really invested into the crypto space and who really know the ins and outs of the different tokens.
Yeah, I think you summarized that so well. I think you summarized Bitcoin in about 30 words, maybe 20 words, whereas Ethereum, you have to start thinking about staking and inflation schedules. I mean, the fact you have to explain what both of those things are for people to understand what it is. And then there's no clear killer app yet, I don't think, which has come out, which people are using without knowing. And I think that's when we're going to see real adoption of kind of the ETH ETF at a huge scale, when people, there's a game or a social network or something, some sort of app that is on Ethereum or Solana or something like that in the background, but you just don't know about it. And kind of all of the normal kind of Web2 users are using it, and it's 10x better. We'll get there, I've no doubt, but it just takes time.
I do have one question there, Ben. I was just thinking about as you were talking. It's almost like I do wonder, as other products, as there's hope for other products, particularly around Solana. I do wonder what warning shot the ETH product launch demonstrates in terms of product market fit and a broader market audience with respect to other very popular tokens, even including Solana. Do you guys have thoughts on where those will go, David, in particular?
I think it's interesting. I know there's been a lot of talk within crypto about how Solana is like eating Ethereum's lunch, and how Solana's going to be the next big thing. And I think that mainly comes down to it being I wouldn't say a better technology necessarily, but it is newer, and it's learned from a lot of the lessons that Ethereum has had to learn. For example, Ethereum went from proof of work to proof of stake. Solana and many of these other new blockchains start off just directly as proof of stake. I think one thing that is a little bit challenging when you kind of go down this rabbit hole is then, all right, if Solana can do this to Ethereum, then what about some of these newer, more performant blockchains? Can they do that to Solana as well, right? Because technology constantly evolves. But part of what you want with blockchain is the decentralization, is the kind of a long-term slower ossification, not full ossification, but just slower changes, because you want your network to be more predictable, more stable. But then some of these newer networks can come ahead and be like, hey, with this technology that's really awesome, really fast, we want to experiment, we want to iterate. We're okay having a little bit of downtime, just so we can get peak throughput, peak capacity. And I think there's a question of, can these other newer blockchains eat Solana's lunch? That hasn't been happening, in spades yet. But there are some like, Sui's been growing very fast. Aptos has also been growing very fast. So there's some other, I guess Gen 3 blockchains almost that have launched in the last year or two that could potentially, eat Solana's lunch as well. So I think that this is like a very long kind of rabbit hole that you could go down. And I think at that point, really, in my opinion, it comes down to the businesses that are building on top of these blockchains. Eventually, it's going to be, if you look at, the internet was really big. Cisco, IBM, like Intel, all these like router creation companies. But eventually, what we have today is, Google, Microsoft, the ones that are, building the software that we use, irregardless of whichever router you use. People don't really care about that as much anymore. And so I think that that's maybe the long-term trend. That will take years, but I think that's where we're going to go eventually.
Yeah, I totally agree with that. I mean, you only have to think about some of the upcoming launches this year, whether it's Monad or Mega ETH or Berachain, and all of these are kind of taking a pretty clear aim at both Solana, and more often more like Solana than ETH in some cases. We got Firedancer is going to launch towards the end of the year, which will include improved Solana. So I think the one thing in my mind that ETH has over everything else, it just has the mind share, and it has got the large pool of developers and the original, I guess, the OG DeFi apps and OG apps in general. But yeah, Solana is clipping at its heels, but there's many others clipping at Solana's heels as well. But we are just still so early. But that doesn't stop people trying to get ETFs around these things. And there was, we touched on it last week around the SOL ETF. David, there was some nuance you brought up around that. So can you just run us through what the, I guess, the nuance of the news around the SOL ETF was last week?
Yeah, certainly. I mean, there was a lot of hype when Bitwise announced that they were going to file for a Solana ETF in the US, a US spot Solana ETF. However, there's some updates, and I think I pulled up on the slide here about the actual filing process itself. It's a little bit unclear, but essentially, once the Solana ETF filing process begins, it begins with the exchange filing a 19B4 form to the SEC to actually say, hey, we want to register these new ETFs on our trading platform. And after that, the SEC will take that, acknowledge it essentially, and post it on their own website. This second step, this step of where the SEC says, like, hey, we've received your 19B4s, we're going to post them on our website, actually never occurred. So even though the exchanges posted them on the exchange websites, they never actually got posted to the SEC website. And so what this means is that it seems like the exchanges have actually withdrawn the 19B4 forms. Now the issuers like Bitwise and some of the others, they still have their S1 forms. So that's just kind of like saying what the ETF is. Those are still up, but there's no deadline for those. So what the key takeaway here is that some of the March 2025 deadlines for the Solana ETFs you might have heard about, they no longer exist effectively right now. So there's no fix like, hey, we will get a final decision about Solana ETFs by March 2025. That's no longer in the picture. Maybe that'll change with future filings, but today there is no fixed deadline.
Got it. So no date that the market can look to, or Polymarket can make a bet around for everyone to look to. I guess one thing, just while we're kind of talking about SOL and some of its competitors, we do actually have a pretty interesting run into the end of the year. Obviously, macro we'll touch on in a second, but with all these new launches and with Firedancer, and we've got Breakpoint at the end of September. We could see some competition with SOL, and I feel like people are getting better at these launches now because they kind of what works. So you got to launch with a lending protocol, with a DEX protocol, with a perp protocol, probably with a game or two. And we are still so early that there's a good chance that some of these new chains, when they do add in broader compatibility, can start to take users away. David, I'm curious, how are you? I guess how are you thinking about it? Which of these chains are you kind of keeping a close eye on into the year end?
Yeah, that's a great question. I think for me, maybe this is a hot take. I think that we've actually hit a point where we have excess block space. Now, everyone's talking about block space being scarce, very expensive. I think now, especially with L2s, a lot of these new chains launching, a lot of new high throughput chains, we're seeing honestly more block space than we have organic application demand for. And so for me, what I'm looking at is less so on the L1s and the tokens and exactly the technology there. I feel like generally, most of the applications that you want to build, you can build on-chain today at very low fees. What kind of is keeping me kind of sharp and awake is what are the applications that are being built and where are they being built on? I think one thing that is promising, for example, that Solana does well is they've attracted a lot of the deep-in developers. I think that's really unique. Attracting kind of marrying the physical world with the on-chain world. Ethereum, I think, is still in the lead when it comes to tokenization and RWAs. I'm sure we'll talk about that later today. But that's also another really interesting sector for me. So I think that for now, like my focus has shifted a little bit from the layer one technology trade-offs, unless there's a huge trade-off. But most of them, I think, are very reasonable trade-offs. And then going more towards the app layer, figuring out which new markets are these apps going to enable access to, who's going to be using them, are they real users, are they airdrop farmers, what's happening on the app layer. And I think that's kind of what's really going to be interesting going into Q4.
Yeah, I totally agree. I guess with Ethereum, you've got tokenization, as you mentioned. with Solana, you've got memes and deepin. I guess what are these other chains going to work hard? What sectors are they going to work hard to win? And obviously, you've got a bit of gaming on it on every single chain as well, and then DeFi and ETH as well. So, yeah, definitely one to keep an eye on. Are there any apps that you're playing with at the moment, David? That not the farming ones, the ones that you're kind of excited about and have sustainable growth or metrics that kind of make sense?
Yeah, I think some of the apps that I've been playing around with, I've been experimenting a little bit with different games. I think we've been talking about gaming and blockchain since Axie Infinity in the last cycle, and I think that the gaming side has gotten a lot better. I was experimenting with like Guild of Guardians and some of these other games that actually feel pretty close to regular non-Web3, non-crypto games, and they're marketing themselves not even as a crypto or a Web3 game. They're just saying like, hey, here's a game, you can play it, and in the background they're starting to do some of this stuff on chain. I think the challenge, and I think that it's very promising to me that what's happening there. I think the challenge actually then becomes, how does this game, because most of the fees are actually captured, in-app purchases, etc. How does that actually provide value to some of these L1 tokens? I think that might be a little bit more of a deep dive of a question, which is some of these games and some of these apps might actually just keep their revenue to themselves. Maybe they're denominated in USDC, like Polymarket, for example, and they just take fees in USDC, and then the transaction fees and the additional activity to the L1 blockchain isn't as much as you might think it would be. So I think that would be that is an interesting trend that I'm starting to see in many of these apps that I'm experimenting with. I don't think I've deep dived like super deep into any of these games, but I've definitely installed, set up, played like 30 minutes to an hour of 5-6 different games now, and I think the experience has gotten a lot better. Still not exactly as good as Web2 games, but getting there, definitely, for sure.
I mean, I feel like it's a full-time job to know all the apps that are going on. Literally, like you need probably half an hour to an hour minimum to know what's going on. And there's just so many across every different chain that are fun for sure, but it's a lot of work. So thank you for doing that. Right, moving on to macro. Josh, give us a quick rundown. Jackson Hole, as well as people enjoying the beautiful views and fresh air, and Wyoming bowl account seems pretty amazing. What else came out of it? Have you been to Wyoming?
I have never been to Wyoming. I want to go for the very things that you mentioned, particularly that view where there's like that fence right there and you see like whatever mountains there are in the background. I mean, it looks awesome.
Yeah, I mean, like Jackson Hole for winter, a bit of skiing. I've not been, just heard incredible things about it. Maybe there's a ski trip in there somewhere.
Yeah, a Coinbase ski trip will be fun. Just heading into the market though, so especially as we head into what we consider to be, or what some consider to be the last week of summer, the market has really felt quite subdued. If we recap the major event from last week, which were positive comments from Jay Powell, the market seemed to love Jay Powell's comment and explicit, I think, affirmation that, and quote, the time has come for policy to adjust. And his chat about protecting labor market conditions, that ultimately ended up supporting risk assets and pushed BTC price action to near recent highs, really leaving, I think, earlier price action in the month in the rear view. From here, I think the market will be focused on the pace of rate cuts, with some doves expecting us to see like a 50 bip rate cut in September. I do wonder, though, I'm cautious around that, given that, a 50 bip rate cut, what that signals to the world, I think potentially is that it's capitulation by the Fed to some extent, that market conditions have deteriorated to the point that the Fed needs to do a large cut. If you do recall, the last time I think the Fed did that was when COVID was really kicking off in March of 2020. So the pace of that sort of cut, I think, would be taken as unwelcome news by some, resulting in potentially a sell-off actually in risk assets. The pace of cuts in general, I think, in my view, is really the major focus here. With the current market pricing more than one cut in September and 4 cuts by year end. The dots will be the big thing for September, because if you look at the June dots, you'll see that the median end rate was 5.125%. So seeing where the next dots come in will obviously have an interesting read through. But what we would expect is any continued, I think, supportive monetary policy, and one that's not overall surprising, I think will result in stronger crypto price action, as just simply evidenced by Friday and the flows that we just talked about.
Yeah, that makes a ton of sense. I feel like every single time we get a Fed governor on TV, everybody is just listening out for every single word, and the market is just so quick to react to those. But We shall see how the labour market continues to perform in the coming months as to how they cut, or how much they cut rather than how quickly. Now, David, we have other things this week as well. The one name which seems to be the market at the moment is reporting numbers. There are perhaps some read across to crypto as well. So what are we looking for with regards to Nvidia?
Yeah, Nvidia earnings are being released tomorrow. They're a huge portion of the market. They're 6.6% of the S&P 500, second only to Apple today. And so in big part, they've actually been driving a lot of the market returns year to date. They're actually trading, Nvidia's actually trading near its mid-June highs of, it's at 126 right now. Mid-June high was around 135. This is post the split. And I think this is something that's very important to watch, because this is kind of like a leading indicator on AI spend. And AI spend has really been what's driving a lot of the tech gains this year. And it's also been driving a lot of the new crypto X AI or crypto and AI applications that are being pushed out. I know there's a few layer ones that are being pushed out as like AI friendly layer ones. There's a lot of AI friendly apps that are being built out too, like autonomous agents, etc. And so sentiment around AI is something that's been driving the market. And I think that Nvidia earnings are going to be either positive for that or negative for that. And I think that's going to be driving a lot of price action in the minutes or hours after the earnings release, especially since it's after hours and the stock market itself will be closed. And so crypto will be essentially the only way you can trade that during that time.
Yeah, it's funny, isn't it? It feels like our asset class, as people get to understand it more, does become that release valve for trading risk when everything else is closed. And it does feel like there's a lot of people that are just hoping Nvidia comes out strong to keep the market where it is, whether it's traditional or crypto. Just digging down a layer deeper, when we think about some of the crypto projects that are focusing on AI, are there any that kind of jump out that you've played with or seen or heard about that are kind of furthest along with integrating AI or utilizing or using their network to for GPUs or anything like that? Or are we still very much in the kind of the venture early stages of these projects?
Yeah, I would say we're still very much in the venture and early stages. A few names that would stand out to me. I know Near, for example, has been pushing itself as like the AI blockchain. Its founder was actually on one of the authors of the paper, Attention is All You Need, which is essentially the paper that created LLMs, like that powers ChatGPT, Claude, and all these other use cases that you see today. So he's actually has a very strong background in AI. And so he's kind of like leaned into that in the last year or so. On the other hand, you have a lot of the DeepIn projects from Solana, for example, these decentralized compute platforms that are also trying to make AI inference and compute cheaper and kind of decentralize that out of these major tech powerhouses' hands. And so I think that these are, I would say, the two biggest sectors. There's a number of other sectors or a number of other kind of teams that are building autonomous AI agents, for example, transacting on chains. That almost falls into the part of like bots, I would say. But they're, the branding is AI agents, so they're autonomous agents that can just transact on chain. So I think those are the three main sectors. For the latter, I wouldn't say there's like a huge adoption at this point. But DeepIn and Near as kind of like the AI friendly blockchain are, I guess, the two ones to watch following the Nvidia earnings release.
Perfect. Well, keep an eye on those. And that's the 28th, right?
Yeah, tomorrow. Wednesday.
Yeah, tomorrow, Wednesday. Awesome. Yeah, we'll keep an eye on those. Now, David, stick with us. MakerDAO have rebranded to Sky. I love the name. I think it's a really strong change. Can you run us through what the change means, and maybe a quick reminder for those that aren't super familiar with MakerDAO?
Sure. MakerDAO is, just as background, MakerDAO is probably the second largest borrowing and lending protocol today. Aave recently surpassed it, but they are the biggest issuer of the decentralized stablecoin DAI, which is a US dollar pegged stablecoin that is backed by a mixture of ETH, Bitcoin, USDC, other real world assets. And so they're really the decentralized stablecoin issuer of crypto. And they've been having this end game master plan in the works for several years now. And this rebranding from MakerDAO to Sky, the introduction of the Sky governance token with the 1 to 24,000 ratio from Maker to Sky. So Maker is at 2,000 something today. Sky will be at around 10 cents. And so this whole rebranding thing is step one in their end game. There's further steps, including moving everything to purely governance driven. So no more technical upgrades. Everything is just going to be on-chain governance-driven upgrades and kind of parameter changes. There's also, they want to build their own network and then kind of do more canonical bridging across different networks for DAI. So DAI is very Ethereum focused right now. So there's all this big end game plan, and this is step one. And I think that people see this as a kind of a bullish catalyst, just because it's Maker finally executing on this end game plan that's been in the works for at least 2 years, and just kind of moving forward with not only Maker and Sky, but also some of the sub-DAO tokens. For example, Spark is another large borrowing and lending protocol that might eventually see its own governance token. So I think there's a lot of things that are happening in the MakerDAO ecosystem, and this is just the first step to get people excited about it.
Of the updates there, what do you think is kind of the most impactful and one that is going to help its growth the most?
I think the one that would probably be worth watching the most is the growth of sub-DAOs. So Maker has a very unique governance structure where the Maker token today is the only governance token, and then now the Sky token. But they also have other kind of applications within the Maker ecosystem. For example, their plan is to make an RWA DAO that would kind of handle all the RWA integrations. Spark is a fork of Aave v3, so it's another borrowing and lending platform that integrates into Maker. So the idea, for example, is that Spark might have their own governance token, the RWA sub-DAO might have their own governance token, and these are all underneath the broader Maker umbrella. And I think that these governance tokens don't have a very clear distribution platform right now. So there's some speculation that people might be owning the Maker or Sky tokens in anticipation of future airdrops, much like we saw with Celestia earlier this year, where there's a lot of airdrops being awarded to TS stakers. We might see something similar happen to Maker and Sky holders.
Perfect. And Babylon has just launched on Bitcoin. It's certainly one of the most anticipated projects, one that when we speak to clients, it certainly gets mentioned a fair bit. David, can you give us a quick rundown of what Babylon is and how the launch is going, perhaps?
Sure. Babylon is a restaking protocol, kind of like EigenLayer almost. You can think of it as EigenLayer, but on Bitcoin. The idea is that you can stake your Bitcoin, you deposit it to a address, and then it's used to secure other networks. I guess the two big early use cases today are securing Cosmos chain networks, which have token inflation problems, and then also for like random number generation and other kind of, more niche activities. So Babylon, the mainnet launched recently. They spiked transaction fees once it launched, but I think the reason for this is because they had a supply deposit cap of $60 million. It's a very similar approach to EigenLayer. In fact, the founder of Babylon and the founder of EigenLayer previously worked together to author some academic papers. So there's a lot of overlap here. Anyways, I think that this is very promising for the space. It's very exciting for native BTC-Fi. So you no longer need to bridge to Ethereum and stuff like that to use Bitcoin in DeFi applications. I think this is just an early symbol of that. And I think there's more and more projects that are going to be coming along doing similar things. Similar things being, native Bitcoin DeFi.
Perfect. I mean, it's great to see Bitcoin continuing to add DeFi and invest in there, and hopefully becoming, I guess, more programmable in some ways. On that thread, Blinks have also updated, and I guess this is just more around making money programmable, which I think is one of the key benefits of blockchain technology. What should we be paying most attention to there?
Yeah, it's always cool to see new updates to programmable money. So Dialect, which is one of the teams behind Blinks, shipped a new update which essentially allows Blinks to chain actions. So previously, Blinks, if you ever played around with the UI, you would have a rendered link, and it would say, hey, you can do a swap, you can stake some tokens or whatever, and that's just it, one simple thing. Now you can actually do multiple steps on chain. So for example, if you want to mint a NFT for a game, you can pick a hero, you can pick a skin color, you can pick some clothes, and then you can actually mint the hero at the end, all on chain in multi-steps within the single UI. I think that this is very promising. I think that Blinks are almost like a competitor to Farcaster Frames insofar as they're trying to embed Web3 experiences into a Web2 UI. And I think it's always great to see this kind of stuff ship very fast. And I think that's very promising just for better UI, UX, which is something that people in crypto have been touting for a while now, but now it's actually happening.
Yeah, I mean, if we can abstract away some of that complexity and allow people to click one link and perform 5-10 actions at the same time, like surely that makes it a lot easier. And I do think Solana has been very good with regards to making it accessible for retail, and I guess like sub-cent transaction costs obviously helps you there, so you can bundle these things together.
Yeah,
and tokenizations, we spoke about earlier on. So Centrifuge unveiled a lending market with Morpho and also used Coinbase verifications, which David will touch upon in a second. It's also using Coinbase's Layer 2 base. for 3 different variety of tokenized treasury bills. I think what's been interesting here is I think some of the on-chain stuff which has been most successful is the money market funds, the treasury funds, and they're actually seeing some pretty decent growth. But David, from a KYC perspective, like where you're using Coinbase verifications, what's the importance of that? Do you think?
Yeah, I think that's critically important. I know KYC is one of the big friction points for any sort of tokenization. A lot of, for example, tokenized treasury funds, et cetera, you have like a whitelist where only a certain number of people or certain whitelisted addresses are actually allowed to buy and sell these tokenized assets with each other. And then every time you want to onboard to a new type of token, you would actually have to go through the KYC list for that new token, and then you can trade that token. Then you have to go through KYC again just to trade the token. And so what's promising about Coinbase verifications and I guess the broader Ethereum attestation service, which is the framework that it's built upon, is that it enables Coinbase, for example, to say, hey, I can verify that this address is a real person. It's maybe a U.S. citizen, maybe it's an accredited investor, and then we can go ahead and other protocols and other tokens can actually just go ahead and use Coinbase's verification and say, hey, we're going to allow trading through this. So I think that's very promising. I mean, the exact implementations of these things in the long term is still not perfectly clear yet, but I do think that this is a very, very promising kind of path forward in terms of just reducing the friction for on-chain tokenization.
Yeah, I 100% agree. And it's interesting, Aave Labs, and I think we've with Aave, we already have verified pools, I believe, and it's interesting, kind of a lot of the DeFi crossing over with traditional companies. So in this next one example, Aave are proposing integrating BlackRock's Build product into their GHO, which is their stablecoin stability module. So again, it's just more examples of TradFi, DeFi coming together, and to your point, that KYC element allows that to happen. And we've only had that in the more recent past, because years ago it would be impossible for institutions to actually work on DeFi at all because of that. So that's good to see that continuing to grow. And certainly with regards to tokenization, that seems to be one area where we continue to see growth and continue to see new things announced. Now moving on, Story raised $80 million, led by A16Z. David, can you give us a rundown on this one and perhaps why this is interesting, and maybe why they went for their own L1? Now, not everybody needs their own L1, and often that would be a question investors ask. It's like, well, you're raising for a new token, you're building a new L1, why do you need it? But with this one, it feels like there might actually make some sense to have its own L1 chain.
Yeah, definitely. Just a brief background on Story first, just for those of you who don't know. Story is a IP blockchain, so it's about kind of protecting your trademarks, patents, any sort of copyrighted materials, and just a way to kind of tokenize this and track it really across jurisdictions, because there's a lot of friction today in the patenting system, et cetera, where it's very hard to query, it's very hard to have transparency in this. And so Story Protocol aims to solve this issue. And I think this, it's always promising when you see people trying to solve real world problems in crypto. Now, Story actually started out trying to be a protocol. Like they try to be just a decentralized application. And then they eventually realized that there wasn't enough flexibility and enough throughput at the time when they first started to do what they wanted to do. And so they actually shifted to an L2. And then they wanted to be an L2 on Ethereum. But then one thing that was challenging that they realized is that if they're an L2 on Ethereum and they want to, for example, store IP from other chains like Solana, Sui, Aptos, then being an L2 kind of would imply that there's some sort of bias there. There might be some sort of security concerns and some sort of lack of flexibility for securing these other chains and IPs on these other chains. And so eventually they recently shifted to their own L1 chain, which is still an EVM-based L1 chain, but they've made optimizations for querying and fetching these sorts of IP-related NFTs. So they're still using NFTs essentially under the hood, the ERC standards for that. But they've batched and optimized certain things for improvements on their execution layer for specifically IP-related activities. So I think that's been probably one thing that's very interesting. They're still not live yet on mainnet. I think one of the bigger challenges they'll face is actually integration with the existing legal system and actually enforcement of IP. I'll be excited and interested to see how they resolve that. But from a technology side, I think it's a very big problem that they're trying to tackle and something that's very interesting to watch.
Cool. Thank you very much, David. For a quiet week where end of summer, Labor Day is coming up, we actually had quite a lot there. It was nice to go deeper into some of the DeFi stories, and I don't know why they all seem to kind of drop this week, but Definitely a lot going in there specifically. We also have a number of events coming up worth noting. So obviously you have Solana Breakpoint at in September. We have Masari Mainnet. I think particularly Breakpoint, we should probably expect to see some announcements from the Solana ecosystem companies there as well, protocols rather. But that is a wrap for this week. Josh, David, any last thoughts? Anything that you're keeping an eye on? Any fun plans for Labor Day? Anything like that?
I'm off to Mexico, so I'll be vacationing in Cancun for a little bit. Hopefully the market's not too crazy while I'm there.
It will be quite.
I wish I was going to Mexico, David. No, I'm just at home. But I'm looking forward to seeing everything that happens following what I felt like was a quieter summer. I'm not sure if that's how you guys felt, but I felt like in the last couple of weeks in particular, even though, like you're pointing out, there is so much happening in the DeFi world and just so much happening. But otherwise, like in main markets, it felt relatively quiet. So I'm looking forward to when everybody comes back and we're back in action. Hopefully there's, just a busy filled rest of the year. That's the hope.
I feel like you're used to crypto now. August 5th definitely didn't feel too quiet, and then we had all of the news prior to that with certain political candidates being very endeared to crypto. So maybe you're used to the 100 vol pace of life now.
That's right. If there isn't just a screaming red headline and millions of tweets following, it's like a tame day.
Yeah, I think that's fair. Awesome. Well, thank you, Josh. Thank you, David. Thank you to our fantastic production team and everyone else that helps make this happen. That's a wrap for this week. Have a lovely Labor Day for those in the US that celebrate. Enjoy the rest of August, and we will see you in September. Thanks all.